Welcome to Early Edge Club, where we break down one microcap or SME stock a day using a simple structured 20-factor scorecard. Microcap investing can be rewarding, but it's also full of traps. Our goal with this series is to help every retail investor avoid the common mistakes and develop a more thoughtful approach when it comes to investing. Today's section is divided into understanding first the business model, the industry, and then we use our 20-factor scoring, and finally our take on valuations and risk. This company analysis and discussion are part of our internal conversation as we review companies from our ongoing 500 plus microcaps and small cap stocks. We are sharing this to retail investors can build a structured framework when it comes to microcap investing. Just to be clear, this is not an investment advice. Our goal is to help you invest smarter and safer and not tell you what to buy.
So the company I'm presenting now is Arrow Greentech Limited. It was founded in 1982 and they are an innovation-led manufacturer of eco-friendly high-tech products. Mainly they include water-soluble films, mouth-dissolving strips for oral medication, biocompostable materials, and anti-counterfeit products which are used in high-security papers and brand protection. So this part, which is the anti-counterfeit products, it contributes majority of their revenue. In their annual report, they claimed that they couldn't disclose too much about it because of its confidentiality issues. One of the products they have is water-soluble film, which just dissolves in water when you want to dispose of it. Another thing is that they're making this embroidery film on which you can do your embroidery work and then wash it off with water. So the film will get dissolved and your work will stay. Then there's this soap film. You can wash your hands and it dissolves in your hands. So it's like a hygiene thing. Basically, all these products are based on this. And another thing is bioplast, which is again like a organically sourced out of organically sourced raw materials. They are making a plasticizer-free transparent material. It says that they contain natural potato starch. So, okay, going ahead, one of their specialities is that they have 40 plus patents which they intend to monetize. So they want to give out these patented technologies. They want to license it out to people so that they can monetize on them. And they have a strong presence across Europe, Asia, America, and Africa. But majority of their revenue comes from domestic sales, which is 91%. So revenue contribution is so the anti-counterfeit products which I mentioned was 76%. The water-soluble films are 18%, patent royalties are 1%, and others are 5%. So starting with the governance and promoter behavior. So there was a rights issue in 2020, and the reason for this was to provide a loan to their subsidiary company, Avery Pharma, who produces the mouth-dissolving strips that I mentioned. And this was to finance their facility for 3 crores. So it was like a capex thing. Then there was acquisition of equipment for manufacturing facility of the anti-counterfeit thread, which was 1 crore. Incremental working capital 2.5 crore and general corporate purpose 1.7 crore. So Shilpan Patel is the chairman and managing director who owns 35.83%. Disha Patel is his wife, 0.08%. She is the non-executive, non-independent director. And Neil Patel, who is their son, owns 3.58%. He's the joint MD. Moving ahead, so coming to related party transactions, so there was a loan of 3.3 crores given to a subsidiary company, and there was a purchase of raw material from a company over which the KMP has a significant control. This was worth 31.84 crores. Another one was that there was a 36 crore investment in a subsidiary company. They have subsidiaries in UK, and that subsidiary further has stepped down subsidiaries as well. So it's kind of a complicated structure they are having. But yeah, so they were basically giving loans to their subsidiary company.
31 crores is a big amount for a company of this
Yeah,
size.
yes. So that's why I've just given it a 3. I wasn't sure 3 or 0, but for now I've marked a 3. Yeah. Going ahead, so their independent directors formed 63% of the board and family on board was 38%. So I've given a 5. CEO salary was less than 1% in FY24, so again a 5. There was no CEO or CFO resignation and no auditor change, so I've given 5s there as well. Auditor opinion, so auditor opinion was unmodified in 23 and 24, and there was no credit opinion being conducted, so I've just given a 5. Regulatory issue, there wasn't any regulatory issue with them. They have investor presentations, but they don't do con calls, and their results are quarterly. So again, 3. They don't publish their business concentration risk, so I didn't know what to conclude, so I just gave it a zero. And there was nothing about where they are getting their revenue from, whether it's government or what. They only said export was 9%. That was the only information available. Uh, One thing I noticed was that even during the pandemic, their receivables were in control. They were moving in line with revenue only, but it wasn't going very high. So they managed to control that part well. Five. Then, yeah, and of course, their receivables are down to 12% again. After 2 years, they had slightly increased, but now back to 10, 12%. Operating cash flow, it was improving mainly because of PAT. So PAT doubled and the receivables and inventories came down, which is why in FY25 their OCF suddenly shot up. And there is very high recovery post-COVID. Like once the fall was over, they've recovered quite well. So I've given a 5. Inventory trends. So inventory turnover is stable since the last few years, and DSO is in line with their peers. So again, I've given a 5. Cash conversion cycle. So the payable days are falling mainly because the COGS is increasing a lot, and the cash conversion cycle is long. It is taking 3 months for them for that cash conversion cycle to capex. So their fixed asset turnover improved after they did their heavy capex over here. So 25% capex in this FY22, and after that the fixed asset turnover has increased significantly. So I've given a 5.
Where did they do that
Uh,
capex for? The sorry, FY20 was the rights issue. That is the 84.8% capex, correct?
Yeah, but capex was, yeah. So they basically said that there was acquisition of equipment for, so it was like leftover equipment or something, second-hand equipment which they wanted to procure for anti-counterfeit threat. But other than that, they didn't mention what exactly. Majorly, it was to finance this facility for their subsidiary company. Yeah. Okay. So coming to debt, so yeah, they don't have any debt on their books, and naturally, the interest coverage ratio is extremely high. So I've given a 5. They have a good liquidity position, which is even better than their peers. They have current assets to cover their liabilities. So 5. Yeah, so ROCE and ROE have been recovering post-COVID, but average was not as good as their peers, which I noticed. So I've given a 3. Growth consistency. So revenue and PAT is growing high, but it's very inconsistent. So after this major fall, there was a very big rise, and then again in revenue, like there's no consistent revenue growth. Same thing for PAT. Like it's been very erratic. It's been growing, but it's been growing erratically. So I've given a 3. Okay. So they want to pivot towards a high margin anti-counterfeit and security tech. So that is where their main focus will be. They're already mainly focused there, but they want to increase their focus on that side. They have more than 40 global patents and they get revenue from licensing, tech transfers, and consulting. Then, so they said in their annual report that the PVA film market, which is polyvinyl acetate, that market is in 2023 it was worth $551 million, and it is growing at 5.4% CAGR until 2030. It is going to grow. So that's one thing. And water soluble film market is expected to reach 517 million by 2028. So that is again a 5.7% CAGR each year. They have acquired a 3-acre land in Dahej, Gujarat, to expand their manufacturing capacity. So this they were supposed to do in this year or maybe the next year. Coming to industry tailwinds and execution readiness. So yeah, I already mentioned these points. There is rising demand for eco-friendly packaging and brand protection tech. As people are getting more aware about the harmful effects of plastics and other non-biodegradable alternatives, people are moving to more eco-friendly products. If a company is able to provide these packaging products and stuff at a reasonable rate, then why would anyone want to go for the non-eco-friendly products? So that's one point to consider. They have a very strong intellectual property portfolio. As I mentioned, they have a lot of patents and they plan to give out these patents and monetize them. They have a strong execution foundation and it is aligned with global sustainability and security compliance firms. Coming to bull case, so they intend to monetize their patents via partnerships, licensing, and consulting. The Dahej plant they want to enhance for future expansion and cost efficiency. They leverage global demand for secure biodegradable materials. As I mentioned, they have a UK subsidiary as well, so they will be monetizing on that as well. They have very niche tech, so that is kind of their moat, I would say. Their products are very unique and they have complete control over their products. Moving ahead, the bear case. So there are no long-term contracts and there is no revenue visibility at risk. Oh, sorry, the revenue visibility is at risk. There is no fixed contracts which ensure a smooth flow of orders. Then their raw materials are extremely niche and they have a high supply chain dependency. So any these geopolitical conflicts which are going, the supply chain gets affected by that. They will have a tough time manufacturing the basic products because the raw materials itself are very niche on which they are depending. Moving ahead, any technological upgradation or change in the tech can make their products obsolete very soon. Next thing is their patent monetization will depend on their effective enforcement. If people are easily able to copy their product, make cheap duplicates out of it, if their formula gets leaked, then they won't have any strong moat to protect their company. And last thing is that the adoption of this new tech is slow, mainly because the consumers aren't aware of the or maybe even if they are aware, they are not willing to pay extra for a eco-friendly product. So there will be a lot of customer education hurdles to the company. But once that is cleared, I think they will definitely have a better growth prospects in the future. So the overall score is 85.
Before we deep dive, quick note, we are opening Early Edge Club to a small founding cohort of 15 to 20 serious microcap investors. We are building a research first community where we break down businesses together. Every month, we deep dive into two microcap stock chosen by the community. You will be surrounded by thoughtful, like-minded investors from diverse backgrounds, and we are keeping this group small intentionally to preserve the quality of discussion and make a real personal connection. If that sounds like the kind you want to be part of, fill out the short form linked in the description and we will reach out to you soon. Okay, it's available at a PE of 15. That looks attractive with the current market setup. One thing while going through, I saw this huge fluctuation in the share price. Something happened here. I also noticed there was declining revenues between 2017 to 2018 19. So during the next phase of analysis, that is something we would definitely deep dive into to understand why was the fluctuation in revenue, and this would tell a story in terms of the risk that the business carries and what the management has done in order to mitigate that risk. So it's very important to analyze what happened during that period. You could see they were growing well, but then the revenue dipped and then it caught up again. So either the industry dynamics is not conducive or there was some other risk in the business that was not captured by a screen. As you said, the margins are very fluctuating and it is at the higher end of the margin. And this price to earning, it's taken free, but even if you give a 20, I think the target price this model gives is nearly double of what the current price is. Okay, three times. So that looks attractive, but again, it's very subjective. Either we are missing something that we have not analyzed, which is where the second level of analysis comes into play. Uh, they have been operating cash flow positive for quite some time, which is good. And I think I mean there's a new capex that is coming into stream. Yeah, they are investing on something. It would be really nice if the management has given some con call, and that's why we give importance to con call. Management has been selling. Need to check. So yeah, I mean this is going to let's see what number it shows. If our growth rate projections, our required growth rate is 5 and the terminal growth rate is 5, I mean 20, required return is 20% and terminal growth rate is 5% for 5 years and 20 PE. The company implied growth rate for the company at the current price is just 7%. So to realize 20% return, the company has to grow at a CAGR of 7%, which looks kind of doable unless we are missing on something major, which would again come when we do a deeper level of analysis. But overall, at the current price, the stock looks attractive. I think it's taking good support at 600 level as well. So let's see how it pans out from here. I hope you found this framework useful. If you follow this company or have any interesting insight, we would love to hear from you. Drop a comment below. If you have scored this company using our 20 factor scorecard, feel free to share your score and how it compares with ours. If you found this useful, consider subscribing and also check out other videos where we break down more microcap companies and SME companies. If you are interested in joining our small research first cohort, the link to apply is in the description below. Thank you for watching and we will see you in the next one. Bye bye.